Hello everybody. In the current affairs this week, the week ended 21st of July 2024. The union budget for the year 24-25 is to be presented in the parliament on the coming Tuesday, that is 23rd of July. The reactions of what could be presented in the union budget are already there, much visible on the Indian stock markets. The Indian stock markets are fearing that there would be some changes on the way the equity taxation is happening in India in terms of the long-term and short-term capital gains tax. And that fear is something which is translating into a certain level of profit booking and certain kind of a fear which is right now prevalent in the stock market. The foreign institutional investors who have not participated in India all this time were buyers this week to the extent of around 15,000 crores. The domestic institutional investors who have been supporting the market all round since last at least 2 to 3 years were net sellers to the extent of around 6,000 crores. The mutual fund industry, which has been investing very much and supporting the Indian stock markets, are also sitting on cash levels which is their routine cash level. Today the mutual fund industry is sitting on a cash level of 1,25,000 crores. This level of cash was 95,000 crores 6 months back. But there were certain asset management companies which are sitting on a substantial level of cash. For instance, Parag Parikh Asset Management is sitting on a cash level of 15% of all its equity assets. Big time asset management companies like SBI, ICICI and HDFC, all these asset management companies are sitting on cash levels between 7 to 8%. So they are expecting that there could be some correction on account of what could be provided or what could be laid down in the union budget, which is on the 23rd of this month, on the coming Tuesday. The Nifty was by and large unchanged this week, but Nifty mid cap was down by more than 2% and Nifty small cap was down by around 3%. The sector which suffered the most this week was Nifty Metals, which was down by more than 4%, but sectors like Nifty IT and Nifty FMCG both were up by more than 2% despite a falling or a stagnant market. As far as the global commodities are concerned, Brent crude was down by around 3%, gold was down by around 1%, and silver corrected sharply by around 6%. The US markets, the Nasdaq was down by more than 3.5% and S&P 500 was also down by around 2%. We all have been talking since last at least a couple of years that manufacturing in India is picking up and we are trying to replace whatever we were importing, especially from countries like China. But the recent figures in respect of imports which were available this week, it showed that India's imports from China increased by more than 8% and India's export to China declined by around 3%. So India's deficit between imports and exports to China is widening rather than narrowing despite the manufacturing which is getting ramped up in India. So India has to cover a lot of ground to build its manufacturing and to really replace China from being the major supplier to Indian industries and the Indian economy. So many of us would be aware of the film Kota Factory. Kota is a town in Rajasthan which in last several years has come up as a factory for all those students, all those aspiring students who would come to Kota and enroll themselves in coaching classes to secure admission in IITs and medical related courses. And there were a large amount of institutions. There was a complete, in fact, a ecosystem which was running, and the size of that ecosystem was around 5,000 crores. But this year, the things have changed dramatically. The enrollment of students in this Kota factory have declined by 30 to 40%. And the trend which is changing is that students are preferring to study nearby their homes rather than traveling all the way to Kota. So it is not just into manufacturing or certain kinds of services that there is an advent of change which is happening, but in industries or in service driven activities like education, even there are trends which are changing. The trends which is changing could be signaling to the fact that in the new modern India, the country might not need children who are trained to secure marks, but who are having capabilities much more than securing just marks and securing admissions in certain institutions. So these changing trends speaks of the way the economy and the country is changing in the times to come. Thank you.